Good morning and welcome to this Thursday, July 27th edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist at EarningsBeats, and I'll be your host for the next 30 minutes as we prepare for the trading day ahead. Pretty decent action in the market yesterday. We're going to go over that in just a minute. I mean, it was a little bit wild in terms of the volatility, but I thought the market held up pretty well, considering how far we've come and what we could have seen to the downside. We've got futures up this morning pretty strongly. Meta Platforms reported their numbers. I didn't see their numbers, but I did see their reaction. The reaction's pretty strong. That was a company that was showing tremendous relative strength versus the internet group heading into its earnings report, and it came through, at least based on the market reaction. So that was a good thing. We had GDP out this morning. Those looking for a recession are going to have to keep looking. GDP 2.4% for the last quarter. The expectation was 1.5%. So I don't know. I don't see any signs of recession. Initial jobless claims this morning also coming in below expectations. So things are still looking pretty good as far as I can see from an economic perspective. Let's go ahead and jump in and take a look at what happened yesterday. We'll start off with the Dow Jones, which was up 82 points. So we did see a little bit of strength in the Dow. S&P 500 relatively flat. Really the only weakness we saw yesterday was on the NASDAQ, and it wasn't horrible. We were down 0.4%, still clinging above that 20-day moving average. So we have not yet seen a close below the 20-day. And you can go all the way back to the end of April since we've seen a close on the NASDAQ 100 below that 20-day moving average. Mid caps up 13.5%. That's a half percent. And small caps up 2/3%. So really strong action in both mid caps and small caps. And check out the transports, up another 2.7%, 441 points. Transports just continue to rock and roll to the upside, looking really strong. And I'll tell you one thing that's really big about that in just a minute. Moving on to the sectors. Communication services up about 1.5%, a little bit more than that. Industrials up 0.7%. On the flip side, and this was kind of odd, seeing communication services, one of our aggressive groups, leading to the upside, and then technology, our best performer since the beginning of 2023, down 1.34%. It's really odd to see aggressive groups, one on the top and one on the bottom, but that's what we had yesterday. Part of that was due to earnings. Communication services had a big lift from Google. Alphabet came out with their numbers. Again, haven't looked that closely. I'll be doing that a little bit more later today in terms of checking out some of these earnings. But Google, great reaction to earnings, was up nicely, and that led the communication services to the upside. Meanwhile, we had Microsoft. Microsoft, little bit of reduction in some of their guidance. And as a result, software got hit yesterday, carrying technology to the downside. Looking at the industry groups, there's that internet group that I was talking about, up almost 4%. Really big day, breaking out again, even with a negative divergence. Has it played out enough? I mean, we got close to the center line. We got close to the 50-day. I think probably has played out. I wouldn't be surprised to see a continuing move up in the internet, and especially watch Google. That was a stock going into earnings I did not like. They were downtrending horribly, really, for about the last year relative to its internet peers. And now we see internet breaking out and Google having a pretty good day. That could lead that group much, much higher if Alphabet continues to move up. Recreational products, look at the breakout there, up 2.36%. So that's a key area that's been strong in the consumer discretionary area. Seeing it pick up again yesterday, one more breakout. This is the one, though, that I thought was the key to yesterday, especially with those transports. If there's one area that maybe has been lagging a little bit, it's been trending higher, but hasn't really been leading, it's been railroads. Railroads up over 5% yesterday. So just what the transports needed. I'm telling you, the breakout in the transports now, maybe a week or two ago, it was just kind of looked like it was starting to break out. Well, it's not just looking like it anymore. It's taken off. We are seeing a huge move up in the transports. Historically, when the transports go, S&P 500 only does one thing, and it goes up. I've shown you long-term charts. When the transports back, earlier this year, everybody was worried about breadth. Everybody was worried about, the transports. They're not coming along. Small caps not performing well, blah, blah, blah. Well, when that trend broke right there, and I could probably point to a session, one of the Trading Places live sessions, maybe about 6 weeks ago, because I was talking about this 14.5 level. And I said, if we could take that level out, which was the reaction high from back in April, went back down, put in a double bottom. If we could get through that level, that would be the first really bullish signal for the transports. And you can see what has happened since we took out 14.5. We were above the 20. The 20 was above the 50. That is the perfect uptrend configuration. PPO was strengthening, AD line strengthening. There was really nothing not to like about the transports. And this group has just continued to power forward. Now we've got the railroads on board to join the truckers and the airlines. This group is on just a tear and doesn't seem to be slowing down anytime soon. Moving on to the 10-year Treasury yield. So we did have initial jobless claims out this morning. 221,000 was the actual. 235,000 is the estimate. So once again, initial jobless claims coming in below expectations. This would be one of those precursors to maybe a weakening jobs market, where maybe we'll see that unemployment rate go up. That would be if the initial jobless claims started to go up. And we were trending up there for a little while. We got up into I don't remember what the high was, maybe 260,000, 270,000. But they've worked their way all the way back down again and getting back close to 200,000 level, which is very, very bullish for the economy. And we still have not seen any deterioration really in the unemployment rate. So I don't know how you have a recession when the jobs market is so strong. Don't see it coming. Looking at that 10-year Treasury yield, though, this morning, let me give you a quick update on this. Right now, we are up 4 basis points, back to 3.89, almost 3.90%. We did have the Fed meeting yesterday, 2:00 yesterday. The Fed announced a 25 basis point hike. That was pretty much expected. The market showed some volatility after 2:00, but it was nothing horrific to the downside. We actually saw a couple pretty good moves to the upside and then gave it back and then went right back up again and gave it back. I mean, it was typical post 2:00 behavior after a Fed announcement. But the 10-year Treasury yield, the reaction here has been somewhat muted. Yesterday we went down a little bit. Today we've come back a little bit, but really no big change here. The Fed, my biggest takeaway from what I saw of the Fed was that they're just going to go meeting by meeting and determine. Before they were saying probably a couple more rate hikes this month and then next month. And now with this meeting, they said, not so sure about next month. That's kind of the takeaway that I got from it. Everybody, I guess, paraphrases and interprets things a little bit differently, but it was certainly not a definitive rate hike next month. And if anything, the Fed's going to use the data to determine whether or not to hike or just to pause, keep it, the same. We'll see how the numbers come in terms of inflation. My suspicion is that they're probably going to pause again. Again, let's wait and see how the data comes in. But if we continue to see that inflation data weakening, where a lot of the numbers coming down, the CPI, PPI, and so forth, I think the stock market will continue to anticipate that. And I think that's your catalyst. Since the 10-year Treasury yield topped in October of last year, that's when this cyclical bear or the secular bull market resumed and the cyclical bear market ended. It was right at that top in October. So I think as long as rates stay down where they are, it's going to be hard to keep the stock market from going higher. And I do still believe we're going to see an all-time high in the fourth quarter. I mean, it's possible in the third quarter, but normally we don't see that kind of strength in August and September. So I'm not going to go out on a limb there, but I certainly believe by the fourth quarter, we'll be looking at all-time highs. All right, let's move on to check out some of the key index charts. We always like to look at this. Just keep an eye, make sure we're not missing anything. S&P 500 continues to trend higher. That PPO, I think, looks strong. Futures are up, another breakout. We moved through 4,600. I think it'd be very easy for this PPO to turn back up and eliminate any negative divergence here. We don't usually look at the Dow, but the Dow's been stronger of late. Oh, still use that old ticker. When you look at the Dow, I mean, it's been almost straight up, and look at the PPO here, very strong. So some point we might get a 20-day test, but I would love the Dow off of a 20-day. I think momentum here is quite strong after sideways consolidating all the way since back at the end of November. We did not have a new high after November on the Dow until here in these last couple of weeks. And usually when you consolidate for a long period like that and you make a breakout, sometimes the moves to the upside can be extremely swift. We saw it with the transports. We've seen it with the Russell 2000. And the Russell 2000, I'm going to go to that one in just a minute. But the Russell 2000 is another one where if we get that breakout above 198, 199, I think the Russell 2000 could really go on a tear from here. So keeping that one on my radar for sure. But this breakout on the Dow, really important. And now up at the 35.5 level. If we go to a weekly 5-year chart, 37,000 is the all-time high. That was January of 2022. And that number on an intraday basis is, oh, I thought it was 37. We didn't quite get there. 36,952. 36,952. We're only 1,400 points away, 4%. And the Dow's there. So I think things are looking pretty good here for the Dow after just making this breakout. I think we're going to run up to test that level. That's what I would expect. And I don't think we're going to wait for the fourth quarter for that one. I believe the Dow is going to head up to that 36.9 area, probably here over the course of the next several weeks. All right. Let's go take a look at the NASDAQ 100. We've had that pullback. I'll tell you with Meta's, I don't think I gave you the futures. Right now, the NASDAQ futures are up 1.33%. So that would take us up about 200 points, which would get us to 15,700 roughly at the open. Not a breakout, but certainly moving back in that direction. Like I said, Meta platforms doing extremely well. Let me show you the after or the pre-market on, Meta, not Microsoft. Try it again. Up $28, almost 10%. These moves that we're seeing on these billion, many billions of dollar market cap companies, or even trillion dollar market cap companies, the moves that they're making is mind-boggling, to be honest. I mean, to get a company that size to move up 10% overnight, we're not talking about a small company that was, just kind of going sideways for a while and then comes out with really big news. I mean, I can see 10, 20% moves there. We're talking about a really well-established company followed by analysts all over the world. And for Meta to outperform to this extent, I think is a pretty major thing. And this is taking us up to a new all-time high on Meta. So pretty big deal this morning on Meta platforms. And that, of course, helping the NASDAQ. The transports, I mentioned this one. Look at that move yesterday. And again, a lot of that was triggered by the railroads. Railroads absolutely on fire. That was a big breakout there. IWM, this is the one that I was talking about. I'm going to go back a little bit further. Let's go 3 years. Because the high on the IWM is all the way up at 240. I think we're heading there. But the first step is to take out this triple top. And I believe it is on the verge of happening. If it doesn't happen today, I think it could happen very, very soon. And that's one that I think when it takes off, we could see a really big move to the upside. Of course, watch that 20-day moving average to the downside. That's going to be your key. But this is one that I think has a chance to really run. It's been consolidating now for 14 months, unable to get through 200, and then also holding. You can see the double bottom down there at 165. That double bottom, the high in between a double bottom, is really an important level technically. And we went up, we tested it, pulled back, put in a higher high, went back up, tested it again. And I think on the verge of making potential breakout here. So let me, we're going to go take a look in the pre-market and just see what IWM is doing. Actually, I'll give you all of them. First, we'll do the diamonds. So there's about 0.3% on the diamonds. Spider, closer, a little bit more than 0.75% there. And of course, we got the QQQ, 1.4%, over $5 up on the QQQ. Big move there for sure. And then IWM, 144. We're right at that 198 area. So that is going to be the level to watch. I think of all these indices, Russell 2000 is going to be the one that'll be on my screen probably most of the day. Definitely want to see that. If we get a breakout, again, that's an area I think of the market that could really move because there's a lot of catch up to do. I think all the indices are going to an all-time high, and the Dow's close. NASDAQ's not far away. S&P's not that far away. The IWM Russell 2000's got a little bit more catching up to do. I could see small caps make a big run here. All right. What else did I have for today? Well, let's talk about a chart of the day. Again, for those of you who are new, maybe joining our YouTube stream, live stream for the first time, welcome. Love to have you. Make sure you pass the word along to your friends. I think we take a look at the market here at EarningsBeats a little differently than most folks. And I think it works out to our benefit. I look a lot at, relative ratios. I look at sentiment probably a lot harder than many. And, I always say I like to throw a healthy dose of perspective in my analysis, common sense. Sometimes we look at numbers, we look at PPOs, we look at lines on the chart, and we kind of blur out just plain old common sense. So try to throw in a dose of all of that and kind of bring it all together, try and figure out this puzzle we call the stock market. And I think we've done a really good job over the last several years for our members. If you'd like to just kind of get to know us a little bit better, best way to do it really is to go over to earningsbeats.com and scroll down. Right there, we've got a free newsletter. No credit card required. You can unsubscribe at any time. The best way to get to know us, because not only will you get a newsletter 3 times a week, but you'll also be included on any free events that we have. And we do a number of them. If you're on our EV Digest list, we send out room invitation or, a event invitation to you. So name and email address, all it takes. Hit that subscribe button 3 times a week, Mondays, Wednesdays, Fridays. We try to get it out by 8:30 in the morning Eastern, so about an hour before the market opens. If it's a little later than that, you can blame me because it's usually because I'm just getting it out a little bit late. I focus on areas like relative strength, earnings, big, we're EarningsBeats. So obviously we focus a lot on earnings. And if you don't know, my prior career, I was practicing CPA. Don't practice that anymore. I really love what I do with the stock market, but I was in public accounting for 20 years. I led our audit team. I was a partner in a CPA firm. I know financials. I know fundamentals. And so I think I bring a little bit of a unique flavor to analyzing the stock market because it's not just about the charts and the numbers, but I have a pretty extensive fundamental background as well. So bringing it all together and then throwing in the seasonality, the sentiment, all these other things, I think that culminates in what I believe is the best market guidance out there anywhere. But anyway, you can start off your relationship with us simply by subscribing to our new or our newsletter. We'd love to have you. Now, if you want to try us out, 30 days, no cost. Make sure you just click on that green button, get you set up. It's always a great time to join. We got a lot of earnings reports we're going over. Within the next month, we will be announcing our latest stock portfolios. So 10 equal weighted stocks that go in 3 different portfolios that we've had a really good history, long-term, beating the S&P 500. So anyway, check us out. We'd love to have you. Moving on to the chart of the day. I talked about it earlier, but I think it deserves more talk, and that is the railroad index. If you look across here, this was all the way back in October when we hit the low. And remember, the fourth quarter of last year is when we had a lot of the value stocks, areas outside of technology and consumer discretionary and communication services. All the other areas had a big move in the fourth quarter. That's what led this secular bull market advance. A lot of folks, I think, have either ignored that or forgotten that. They think, oh, it's been led by the NASDAQ. That's not the case. Since October, we had that big move up in the value stocks first. And then it was money rotating over into the NASDAQ and technology areas and so forth, starting in January. And then we went on that big run. And all of these other stocks, value stocks, the transportation stocks, all of these stocks went through a period of just sideways consolidation. They didn't participate. And so a lot of the bears were saying, oh, this is bad. We're not getting the wide participation. Well, again, they were looking only from January. Go back to October. This was a huge run up. Look at the Dow Jones right now. The Dow Jones is closer to an all-time high than the NASDAQ. Think about that. The Dow Jones didn't go down as much during the cyclical bear, had a much better fourth quarter than the NASDAQ, and then just simply waited and let the NASDAQ play catch up. And then once the NASDAQ played catch up, now we're seeing the Dow break out again. All of this has been bullish rotation since October of last year. Anyway, when you look at railroads, that bullish rotation in November and December is what led to this reaction high up here, right in the 3,200 to 3,250 area. Went back up early in January, couldn't get through. And then went all the way back down and put in a double bottom. This was a very, very weak group. So what do we talk about? Double bottom. What do we want to take out? The high in between. What did we do yesterday? Exploded through that top. Look for railroads to continue to, you might see a little bit of a pullback, but if you do, I'd be looking for some of the best railroads in terms of relative strength and considering those for trades going forward, because I see the railroads going a lot higher from here. All right, last thing I want to go over here. I wanted to pull up our upcoming earnings chart list. This was the one that housed all the stocks that reported the day before yesterday. So this would have been Tuesday afternoon and Wednesday morning. So any stock that reported between Tuesday's close and Wednesday's open is on this one chart list. So I can look at this and just, rather than have to pull up 115 charts, because I think that's how many are here. Let me see. 114. So rather than go through and pull up 114 stocks, I mean, if I wanted to see the reaction to all the earnings, so I wanted Microsoft, Google, and I'd have to go Microsoft. Okay, there's that one. Alphabet or Google. Okay, then Visa. You know how long it would take me to go through and do this for 114 stocks? It would take a little bit of time. So instead, what we can do is we put all of those stocks in a chart list. We do this every day during earnings season for our members. So it takes you exactly one click. Once you're in this chart list, you hit the summary. And there you go. There's your 114 stocks and the reaction to every one of them in order of the market reaction, the percentage change. So one that I talked about yesterday, we had a live trading room for our members yesterday at 10 o'clock. One that really was a shocker to me was Teladoc, because it had been such a poor relative performer. It's disappointed so many times. And when it does get a gap up, with earnings or whatever, or with any good news, it seems to just quit. And so I said yesterday, I was like, this thing's got to get through about 27.25 to 28.25. Well, it got to 28.92. So it made that first step of repairing its chart. And look at the volume that came in, almost 40 million shares. This is one of the holdings at the ARK funds, Kathy Wood. And her ARK funds, by the way, are starting to do extremely well. This is the market that I think her funds will do extremely well again. I didn't even consider any of the ARK funds for probably 2 years because she kept buying stocks that were in downtrends. I never could quite figure that out. But she just kept adding and adding and adding and adding on the way down. The funds were getting killed. Because like I say to all of our members and to all of you out there, when you're in a cyclical bear market, you don't play by the same rules. And in 2022, we had a lot of issues. You don't buy growth stocks in a cyclical bear market. That's bear market 101. And she kept doing it. And her funds got absolutely killed. I don't know how a lot of her investors stayed with her, to be honest. But things have changed. Now we've got money rotating into a lot of areas that are benefiting those funds that she has and the stocks that are in them. I think those funds are great areas to be in. You got to have a little bit of riskiness in your, want to be able to take on some risk. But I think they're going to do really well, probably over the next few years. So I would have no problems being in on those. In fact, our model ETF portfolio, we put one of them in. So that tells you how much I like those funds right now. Anyway, looking at the reactions. So Teladoc obviously was one big surprise. We talked about Tilray, and this one actually went up, pulled back, and closed near the low of the day. I would have felt much better about this stock had it been toward the upper end. I still think this one's got a chance to move, though, possibly, 2.5, 2.75, and then get through that area. I think this thing could shoot up to $4.50, maybe $5. And I don't know what's going on with it this morning. It's up 9 cents, almost 5%. I wouldn't be surprised to see this one go, just because it's been beaten down for so long. And a quick, this type of stock runs pretty quickly. So let's go to what else? Boeing. Boeing had a really big day yesterday. Look at the breakout. This is a stock that I've been liking for a while. It's been going sideways, so it hasn't done much, but this is a big breakout that's going to help the industrial group going forward. They came out with some really good numbers, better than expected. They're being helped by the airline group, which has been strengthening. A lot going on here to like. I think Boeing continues moving higher. We got 2 minutes. I'm going to try and get out on time today. Let's see. Hold on a second. All right. Let's go to the bottom of the list. See what didn't work yesterday. Pull up a couple of these. We got Euronet. Oh, this was one I looked at yesterday too. It had come down in the morning to about 95 and change, which was slightly lower than this low. And it was back up to about 98, I think. It had rebounded a little bit. And I said, hey, this could be a false breakdown and a big reversal to the upside. Thought about trading it and then looked at where the relative strength was and said, well, with the Fed coming up, probably not a great one to trade. And so decided not to take that one on. Thank goodness. That would have been a stop out. We did take 2 on though yesterday, and both were up a little bit by the close, I think. I'll sort this alphabetically so I can find them. One was AutoNation, should be right at the top. Oh, AutoNation reported earlier, never mind. But Manhattan was one that reported yesterday, and we bought it on weakness yesterday. Right down here at I think got into this one at 187 and change from what I remember. It did go down a little bit lower, got as low as 184, and then rallied back to 188.49. This was a stock, though, that was one of the best performers in software, which has been one of the best groups. And over the course of 5 days, it pulled back 10% and to the 50-day moving average. AD line still remains pretty strong. We took a chance. I would say, if you're looking for a stop, you could put one in below yesterday's low. I'm probably going to hold it as long as it holds above 180. I'm going to give it a little room. Sometimes when you start or when you're in uptrends, you test that 50-day for the first time in a while. Sometimes you go a little bit below. I'm going to give it a little bit of room, but this is one I think could easily move back up to that 208 area. And the other one was AutoNation. We'll wrap up with this one. Another one that had tremendous pre-earnings move to the upside, and then we had a sell on the news. And another one, again, down near the 50, waiting for a little bit of reversal. This one, I believe I got in at 154.30 or something like that. I think that's right. 154 something or other. Anyway, nice reversal, nice finish on AutoNation yesterday. And 156 is where we came back. So I don't know. We were in our room sometime. It was probably right in here, maybe. No, I don't remember when it was, but it was sometime between 10 and 10:45. All right, that's it. So let's go ahead and take a quick look. Market just opened. NASDAQ up 185, 1.3%. Everything's green, even the small caps. I'm going to show you the IWM in just a second because I do want to watch that. Look at the VIX now below 13. I think the bears had a little bit of a chance, and it looks like that chance is fading. With this gap up, more and more groups breaking out. I mean, maybe the NASDAQ with this gap up, maybe it'll, pull back a little bit intraday relative to the other areas. But I'm not sure we're going to get that 50-day test. The market just does not seem to want to go down there. We're getting close to the end of July, early August. That's another very bullish historical period. Maybe we make one more run, and maybe there's still a little bit of a negative divergence. And then maybe as August rolls in, that could be where we start to see a little bit more weakness. I don't know. But what I've said all along is this market wants to go higher. I don't see anything that changes my opinion on that whatsoever. And we'll see where we end up at the end of the year, but I think we'll be a lot higher. All right, let's take a quick look at that IWM and then we'll wrap up. I wanted to see if it's breaking out. It's right at 197.5. I mean, we are right there. Keep an eye on this one. We could have a big, big move coming up in small caps. All right, that's it. Have a great day, everybody. I'll be back next Tuesday. So our schedule has changed a little bit. I used to do Monday and Wednesday shows at EarningsBeats, and I used to do Tuesday and Thursday at Stock Charts. And then Stock Charts no longer does their 24/7 stream. So we wanted to have the show live still at 9 o'clock. So now we are doing all of the 9 o'clock shows right here at EarningsBeats, and we're live streaming it. So on Tuesday, Wednesday, and Thursday, you will be able to find us at 9 a.m. And then the fourth show, instead of doing a 9 a.m. show, we're doing our live trading room at 10 a.m. on Wednesdays. So you want to make sure you check that out. Take out a 30-day trial and check that out. You'll get 4 Wednesday live trading rooms for free if you check us out. Also, I want to mention we have done a ton of webinars over the course of the last, probably, I don't see it on here anymore. We had a webinar special up here that I thought went through midnight tonight. But anyway, write us at support@earningsbeats.com. And the special was essentially you get a free bonus month if you take us out for an annual period. 1 year is $997. But you get your 30-day trial, and you also get a free bonus month. So if you signed up today, you could get 14 months for the price of 12, which brings that cost down quite a bit on a monthly basis, probably down to about $70 a month. Our regular monthly rate, if you just subscribe monthly, is $147. So this is a great opportunity to save some serious money. So make sure you check that out. If you're a non-member, if you're a trial member, or even if you're a current annual member and you're coming up for renewal, make sure you check out this. Is a good deal. And I'm almost certain it runs through tonight, midnight. If you write in, we'll honor it. I promise you. Anyway, everybody have a great day. Have a great weekend, and I'll see you next Tuesday. Happy trading.